It's the paradox, as you said, and as the three principals said yesterday. Look, I think it worked. I was involved in the paper that Ben Bernanke mentioned yesterday that evaluates the outcomes. I'm sure we could have communicated better, although we had a really phenomenal communication staff. I'm not sure what we could have done better, differently, faster. Obviously the sorts of authorities that exist now in the Dodd-Frank law, the Title II non-bank resolution, that could have been used to handle Lehman probably better and differently. It wasn't available then. So given the tools that we had then, I think it would have been tough to do much better, which I know sounds like, oh, pat yourself on the back. But I think that was just the reality, given what we could work with. At the time.
Even today, you have people who say, look. Well, I mean, there are people on both sides. There are people on one side that say, look, you should just let the banks go down. And then on the other side, there are people who say, actually, you shouldn't give money to the banks. You should have given money directly to homeowners.
Yeah.
Do you have a take on either of those?
Yeah, no, on both. The other paper I was involved with in yesterday's conference is the housing one. It's a really tough issue, right? The money to the banks was an investment. It was critical to stabilize the financial system because that's in some sense, a foundation of our economy. But there's just no way it's going to be popular. And I think in your conversation yesterday with Ben, Tim, and Hank, you drew that out very well. It had to be done. And it was going to be criticized. I think it was effective. And what's still fascinating to me is so many academics don't think so, right? There's so many academics, I'm a professor now, right? It's my audience. And they say, oh, you guys are such idiots. Everyone in Washington, it's so simple. You guys are such idiots. And it's, I haven't heard of a better solution. But that's still, as you say, a vibe.
Speak to the housing issue. If you had given money either through principal reduction or lowering rates or something, do you think that would have been as effective?
It would have been different, right? So stabilizing the banks was essential. One could imagine having done a massive housing bailout, say in the spring of 2008, say a week after Bear Stearns was rescued, if the government had come out and said, okay, we're gonna prevent every foreclosure, right? So every person who got into a home that they shouldn't be in, through misconduct on the originator, on the securitizer, people who, signed on the dotted line and homes they couldn't afford, just whatever, just no one's going to be foreclosed on, no one's going to lose their homes. Well, of course, that would have, in a sense, prevented banks from failing because it would have wiped away all the sins in origination and securitization. But it was politically infeasible, right? There's no appetite for a massive bailout. Right. So, in the sense in which the policy response just naturally gets criticized from both directions.
Talking about politically unpopular, but here's an interesting counterfactual. What do you think would have happened had the government saved Lehman Brothers?
It's always hard to know.
What happened afterwards?
Yeah, it's always hard to know. Certainly, the expectation of other bailouts would have been there. I suspect every counterparty of Lehman would have said to the Fed, thank you very much, we will take our 100 cents on the dollar right now, and we are gone, right? They had some long-term debt, but not a whole lot of long-term debt. That would have rolled off within, a year, probably not much more than a year. And the Fed would have been left operating Lehman and funding Lehman indefinitely. Right. In some ways, a little bit more akin to what we've seen in Europe, where they essentially failed to resolve their issues.